When someone's escrowing, when their taxes and insurance are included in the payment, they're escrowing, you and I know this. How do you explain that to people? I find sometimes people get hung up on like what escrow means, and sometimes I want to say to them, it's like a savings account that you can't contribute to. It is simply just holding the monies that are owed for your property taxes and your homeowner's insurance when the time is due. But how do you kind of break it down for people who are a little hung up on the word and not understanding the meaning?
If I were to ask you to go across the street and get me a cup of coffee, you'd probably want the money up front, right? Makes sense. You wouldn't have to go out of pocket to buy me a cup of coffee. And even if you knew it was a $6 cup of coffee, you'd probably want me to hand you a $10 bill, right? Just to make sure that you had more than enough to cover that amount. That's how the lenders are working too. They're collecting money up front to make sure that when they buy that cup of coffee or when they're paying your property taxes or insurance on your behalf, that they're not having to go out of pocket. You can imagine they have, depending on the lender, thousands of loans, hundreds of thousands of loans. So if they had to go out of pocket every single time to advance homeowners insurance and property taxes and then retroactively try to collect those amounts from their borrowers, it would just be a nightmare. They would be taking on a whole lot of liability. So by asking that the borrowers provide that money up front, usually 2 to 3 months at closing, you'll see it on the settlement statement where the lenders are asking for 2 to 3 months of homeowners insurance payments, 2 to 3 months of property taxes. And then with each additional payment, the borrower is continuing to contribute to that savings account or the pot of money so that when the bill actually becomes due and owing, the lender will be able to make that payment in full.
I love your cup of coffee analogy. I might have to steal that for my closings going forward.
You should. It seems to make sense for people when they themselves don't want to go out of pocket. Most of the time, lenders do require the escrow payments as part of the loan program. So oftentimes it's not even an option for buyers or sellers. Buyers in DC have a little bit more discretion over whether or not they're able to escrow, but it often depends on how much money is being put down and the risk that the lender is taking on. If you put down a 50% down payment, the lender is going to be less concerned, of course, about you paying your property taxes. If you're a higher income earner, if you have more assets on your financial statement, they're less concerned about those items. But of course, it's going to be a conversation with your lender. I personally prefer that it's escrowed. I like to think of it as a concierge service. 2 less things I have to worry about because my lender is monitoring and making those property tax payments on my behalf, and they're paying my homeowner's insurance. It doesn't take away any control of what I have for my own insurance. I'm still able to shop around, get a new homeowner's insurance policy if I want to. I just need to notify the lender when I make that change. And of course, I want to make sure my lender sees my new policy before I cancel my old policy. If the lender receives notification that there's no homeowner's insurance, what you've signed in your closing package is the right of the lender to select a policy and charge you for it. So just make sure you have a new policy in place before canceling your old one and making sure there's no lapse in coverage, just so you don't run into any issues. But either way, I still have the right to challenge my property tax assessed value.
I really appreciate you answering my questions today.
Thanks, Leah.